We've definitely seen the improvement in retail demand. When you look at the tax reform that really impacted earlier this year, retailers have taken advantage of that. They were paying some of the highest effective tax rates in corporate America, and they've told us that they've been putting that money back into their stores as well as expanding their retail presence, so looking for new stores. Go ahead.
So that's the tax cut helping the retailer's bottom line. Is it bringing in more traffic, though, from individuals buying stuff?
Well, I think the traffic is driven by the retailer's innovation. And so when you look at TJX and what they've been able to do in that treasure hunt mentality, they're actually now they're texting their customers when the trucks are coming in with new merchandise. They're really driving traffic by creating that type of buzz.
Do you see the parking lots full?
We do.
When you
look
those
at
texts go out.
Look at what TJX is doing. It's phenomenal. They have two new concepts too, Home Sense and Sierra Trading Post, which are also
which
new.
are home design stores, which my wife just heard
favorite.
about. She is in love with those places.
Loves going to Home Goods. So
Home Goods.
yeah, you got another
I sit
one.
in the car.
My wife is a huge fan of Home Goods as well. It's a phenomenal concept.
Well, we can have a support group then.
And millennials are coming into their peak spending years too, which bodes really well for our portfolio because they're all coming into their peak spending to really boost retail sales, which we're seeing already in our performance this quarter.
Analysts are excited about small shop occupancy, which hit a high during the quarter. What are small shops compared to some of the tenants that we had mentioned earlier, TJX, Home Depot, et cetera?
It's true. There's demand for small shops as well. That's what we call under 10,000 square feet. And it's really driven by restaurants, so all the franchise concepts that are doing well. Health and wellness is a huge growing category. Services is enormous when you think of hair salons, nail salons, medi-spas. You see a lot of medical too, urgent care facilities. These are all growing trends in shopping centers. And what's also interesting is we're seeing more demand from non-retail uses. So co-working facilities, apartments, hotels, they're coming to the shopping center as a location that they think they can create a live, work, play type of environment. We're taking advantage of that.
Looks like you sold a bunch of properties. Is that true?
We are.
Which ones and why?
We have been aggressively transforming the portfolio, really to meet what we think is going to be the future of retail real estate. We've sold out of the Midwest primarily. We think that there's more of a supply and demand balance in the coastal markets, in the top 20 markets. That's where we see the population growth, the jobs are continuing to grow, and that's where our retailers want to be. They want to have that connectivity with their shoppers, and that's that last mile. When you're in those population
So you're selling, who's buying, and what do they intend to do with those properties?
There's actually been a lot of capital formations for open-air shopping centers. They're looking at the yield that you can find on these assets. They're strong, anchored by typically a TJX or a grocery store. They're just not the growth profile that we're looking for at Kimco. And so there's a lot of capital out there on the sidelines looking for high yields. And when you layer on top of that the debt financing that's available, it's really an attractive investment, especially if it's a stable asset. We were selling assets at 96% occupied. So it's really assets that are very stable. They're just in markets where we don't see the population growing or potential redevelopment potential. That's what we really look for, is to unlock the highest and best use of our real estate.